When it comes time to pass on that business interest, it's important to make sure you're doing it in the most cash flow and tax efficient ways possible. And that's exactly what we're going to talk about today. Hi, I'm Olivia Kirk.
I'm Tim Urich. We're from Tier 1 Capital, and we're here to show you how to regain control of your money.
As a business owner, a lot of times it's hard to even talk about the conversation of the day you're going to leave your business and the day you're going to pass on that business. But it's vitally important, if you want to do it in an efficient way, to do it as soon as possible, not the passing on, but the planning in order to do the passing on.
And that's key because according to the Exit Planning Institute, 74% of business owners want to pass on their business, but only 18% have a plan that's been communicated to those involved in the transition. So there's obviously a disconnect between wanting to plan and actually communicating and setting up a plan. So that's one issue. The other issue is 80 to 90% of a business owner's wealth is tied up in his or her business own.
Which makes it really important to have these conversations, whether it's between you and your business partner or you and your family member. It's important to have this set up so that you're able to monetize that business when it comes time for you to retire. Otherwise, you could be in a position where you are only collecting 24 cents on the dollar for every dollar you have tied up in that business, which is not ideal.
The idea of having a plan, which is the first step, but then now let's talk about the best way to pass that business on. And this is where life insurance comes into play, because life insurance is literally dollars for future delivery. And along the way, depending on the type of insurance you have set up, you can start building equity or cash towards that ultimate cash out.
Right. So you're able to put away money towards those premiums and build up the cash value in your policy so that you're able to access it, have full liquidity use and control of that money. So you're not giving up all of those dollars. You're not sacrificing the growth and optimization of your business in order to achieve this planning. Rather, you're building up a pool of cash that you have full liquidity use and control over, which, by the way, you're able to use to take advantage of opportunities and to grow the business and to operate the business.
Absolutely. So now here's the next great part about using insurance. We said it's dollars for future delivery, but they're discounted dollars. So you're buying $1 of future liquidity for pennies on the dollar each year. Right. So you're doing it almost in the installment plan. And that installment over time starts to build up the cash. And to your point, now you can start accessing that cash to run and grow your business. So now think about it. You set up your succession plan. And because you did, you have access to capital so you can run and grow your business. So you got a succession plan, you got access to capital, and you got a bigger business. All three of those things are necessary as you're developing over time this business entity.
Exactly. And not to mention the biggest benefit in this case which is the death benefit, right? So think about this. You're able to determine the value of that business, determine how much death benefit is going to be needed at the time of the key person's death, usually the business owner's death. And then there's going to be an influx of cash into the hands that need it to buy out that equity. So it's going to guarantee that liquidity at the time where it's needed most.
Yeah. So think about literally what's happening here. The event that creates the problem, the death of the business owner, is literally the event that triggers the solution, the life insurance. Now, let's put a bow on this and explain this. 80 to 90% of a business owner's wealth is tied up in their business. And according to the Exit Planning Institute, the average business owner only receives 25 cents on the dollar for the value of their business interest. By setting up the succession plan, funding it with life insurance, you're literally guaranteeing a full payout of the business value. And that is the value of using life insurance.
Well, let's look at it from the flip side. What if we don't do this planning? What's the cost of succession planning without the plan?
Larger taxes, larger outlays of capital.
Right, because we'll either have to pay it in installments, borrow from the bank, or give up liquidity from the business, or, God forbid, liquidate the business in order to get our hands on that money, right? Because so much of the business's equity is illiquid.
Or having to borrow to transfer the business. And there was a local business here about 15 years ago. It was third generation, and the first generation never did any planning. So when the founder of the business died, everything went to his spouse, who never stepped foot in the plant. And his two sons were running the business. He also had two daughters not involved in the business. So when mom died, she owned 100% of the business. The boys, by the way, grew the business to 3 times what the value was when dad owned the business. The problem was when mom died, there was a significant amount of estate taxes, plus they had to buy out their 2 sisters. They didn't have any money. They did no planning. So what happened? They had to go to the bank and borrow to pay the taxes and to buy out the sisters. This added extra costs to the business, and everything was going along pretty well until the financial crisis hit. And then what happened? They couldn't pay their loans because business went down and the banks called the loans. So now they ended up bankrupting the business. They lost the business. Their sons, 5 boys, were involved in the business. They lost their jobs and their careers. And more importantly, over 150 employees lost their jobs. And here's the point: no succession plan and no insurance to guarantee the transfer of the business.
That's a great point. You have the succession planning, and then you have the funding of the succession planning, which are 2 separate steps here, right? Just because you have a plan doesn't mean that it's easily going to be funded. But when you couple them together, the life insurance and the plan, you have in writing what's going to happen at the death of the business owner, and you have the guaranteed funding that associates with that planning, which is a huge deal, because otherwise you're stuck with an obligation that you don't necessarily have the cash flow to solve.
That's a great point, Olivia, because the plan creates an obligation to pay. The funding, the life insurance, provides the funds to pay. So again, the event that creates the problem, the death of the business owner, is also the event that triggers the solution.
So think about this. Even if the business owner retires and doesn't die prematurely, we still have that funding to guarantee the recoup of all of those dollars that are being paid out to fund that obligation, which is a huge deal, right? So you're able to go to the bank, borrow, or use profits from the business and pay out the business owner on a systematic basis. But you're doing that with the knowledge that you're going to be able to recoup every single dollar on a tax-free basis from that life insurance contract, which is a huge deal because unlike other insurance policies, the death of the insured is a sure thing. As long as you keep that policy in force, you're going to get that death benefit associated with that contract.
And here's the best part. We help business owners have these conversations to set up the plan. We show them options utilizing insurance. And the best part is, in most cases, we find the money within their current cash flow. It's money that they think is moving them forward, but is actually being used inefficiently and is holding them back. The money's in their cash flow to pay for the solution to their succession problem.
Right. So you're able to fund the solution to this issue actually address the issue, get it in writing, fund the plan without taking on more of a monthly obligation, right? So a lot of people, a lot of business owners aren't addressing these issues because they can't afford to solve the problem. Who wants to look at a problem that they can't afford to solve? That's not fun. But if we're able to look at your situation, find money that's inefficient within your cash flow that you're able to redirect to solve this huge, expensive problem, that's not a bad thing, right? It's only going to move you forward and help you sleep better at night, knowing that you have this plan in place and the funding for this plan in place, all without adding extra stress onto your finances, right? Because as we mentioned before, we're building up cash flow all along the way that you have access to, right? We're not taking the premium dollars and giving up control of that money to the insurance company. Rather, we're giving up those premium dollars and building up a pool of cash that we're able to leverage to grow the business, to take advantage of opportunities, to take care of those chronic and cyclical cash flow concerns that so many business owners across the world are experiencing. So it's all along the way, at every step, putting you in a more secure financial position. If you'd like to learn more about how to put these strategies to work for your business and your family, be sure to visit our website at tier1capital.com to schedule your free strategy session today. Also, if you like this video, be sure to check out these two. We picked them out special for you.
Thank you so much for watching our video. And remember, it's not how much money you make.
It's how much money you keep that really matters. We'll see you in the next one.